On the expense side, I always like to point this out. This is the one we track closest, is our salary and wage expense. You can see that this is for our first 3 months actual, $2,058,000 compared to $2,072,000 for last year. So even with the salary increases that we gave, at the first of this fiscal year, we're still, about 1% under where we were last year, and that's a credit to our department managers and how hard they work on that. A couple of items out of that. If you look at this month, our salary expense is a little higher than the 2 previous months. We've gone back and looked at that. That's really in 3 separate areas. One is in the lab, where in December they have the outage out at the power plant, and we staff for that, so we had a significant or had higher salaries in the lab department, but that's offset by revenue. The other 2 areas, one is in the nursing service, with the construction and with all the changes that are going on our floors. Our salary expense in nursing was a little higher than the previous months. That's a result of trying to staff around the construction. We utilized the 2 observation beds in the emergency room, and we had patients back there. When we do that, we have to staff for it. So a little bit higher there, but again, we recognize what that is. And the other thing is, I kind of want to point out to you on this is, it's kind of interesting the difference between the hospital and the nursing home related to salary, wage, expense, and holidays. In the hospital, generally, our census goes down, during the holidays, and we flex our staff down to match that. In the nursing home, the census is stable, so whenever we have a full house, which we always do in the nursing home, we pay bonus pay, or not bonus pay, we pay holiday pay for people that work on the holidays. So on holidays in the nursing home, our salary expense will go up a little bit as compared to in the hospital. I'll tell you this, that the census in the hospital this year dropped very little during the Christmas holidays. We had a nice strong census during the holidays. Questions on that? Nothing else. Nothing else significant on the depreciation expense. You'll see that's a little higher. What we did in December is, after the audit, we get a new number for our depreciation expense. We book the same number all through the year, so we got the new number, so we've adjusted that in December. So you'll see that $40,000 depreciation expense for the rest of the year. But that's a little bit of an adjustment there to compensate for the new depreciation schedule for fiscal 2010. Questions on that?
So we were projected to be $1 million loss for the year.
Let's go over and look at our compared to the budget just a little bit, and this is a kind of give you a better look at what we were projected to do and where we are. Here is for the first 3 months. This is consolidated. Our profit of $27,000 compared to budget. We were budgeted to lose $240,000, so about a $270,000 variance there. And for the same period last year, we lost $243,000. So a significant variance both compared to budget and then compared to the prior year. And you asked for the total year. For the total year, we projected a loss of $1,224,000.
And the first quarter, we're $40,000 to the good.
We're in the black.
$27,000.
Consolidated.
Yeah.
Yeah, and I haven't really spent a whole lot of time down here on the other income. I like to look at the operating income statement. What this number right here is, there's 2 numbers in that. For this month, you can see that that's a pretty good sized number. There's the HRSA grant, which was about nearly $400,000. 377. And then there's a UPL money, which we receive on a quarterly basis, and that was $92,000 for this month. And then as we reported to the Finance Committee, We netted 18,000 of attorney fees out of this number right here. That's transition expenses, and you'll start to see a line here which shows transition expenses. We'll get our format of our income statement. We want to take our transition expenses, we want to take those what we call below the line, because those are non-operating expenses, they're non-basic expenses, but they are reflected in this number here. What we did, we just frankly reduced our other income by 80,000 to reflect that. You see, with that other, I mean, a very nice, with all of, with the UPL money and with the other income, a very nice profit for the first quarter. But this is the number that we would like to focus on here because that's operating.
Was that grant to purchase capital items?
Yes, this one particularly was to purchase the CT unit.
Well, I'm a little shocked to put a grant on the income statement. Looks like that been handled different way.
Well, I mean, it's income to us. I mean, it's non-operating income, and so that's the reason we show it what we show it below the line, so that we're disclosing that, but we're not showing it as part of our operation. Any other questions on the?
I don't think it ought to be overlooked or overshadowed, but that's a considerable difference in operating. Forget the bottom below the line thing, but we're $267,000 better than we had projected.
Exactly. That's a bring that out. Yeah, we're almost 270,000.
And that's you know, Ernie, you've made a comment, and I think Walter has too, on several occasions, that you don't like having a negative budget projection for the year. That's an indication that projection, for at least the first quarter of the year, we're headed towards a significantly better figure by the end of the year if we continue to track in this manner. That's the good news.
And here's, I want to show you this. This is just for information. That we track cash every month, and here's the way we do it. Here's our net revenue. This is for both the hospital and the nursing home. That net revenue is 1.5, and with our collections of $1,500,000, 102%. And then not on this report is the 501A collections. I think we had collections of 501A in December of 77,000, which was 98% of that revenue.